Hello, my name is Pakulski and welcome to our business planning channel. If you have a startup and you need to calculate the financial efficiency of your business idea, I hope this video will be useful to you. And today we will go through the financial model of a startup. It is online game. And I will show you the details, the input data, which is vital for you when you construct this business and your investor asks you how much money you need to launch this business. And during this video we will go through the financial model of a startup, of an online game, and I will show you what features you should pay attention to, and at the end we will look at the cash flow statement and the financial efficiency of this business. Let's go on. First of all the input data is colored with blue. All other cells are automatic, and if you or your investor needs to correct or put his own data, he can rename these cells, this one, this one, this one, this one, or this one, and all other cells will automatically change, and all the efficiency of business, all the graphs of payback and simple and discounted payback periods will also automatically change. When we speak about startups, about online gaming, people usually mean that there is an amount of users that is a break-even point, but usually entrepreneurs and startups forget that there is no one type of user. There are different types of user, and each type of user of this game they have different financial behavior. They have different terms of using your game, and some of them buy additional options, some of them don't buy at all, some of them stays with you for 1 month, some of them stays with you for half a year, some of them stay with you during a year. And when you make a financial model, you should make the correct financial behavior to figure out the right efficiency of this business. And the first block of input data is explanation of financial behavior of our users. For example, when we launch our online game service, we have 6 different types of users of our game. We can name them. Another parameter that is vital for us when we describe each type of user is frequency of using our game. For example, one person can play once a day, another person can play twice a day, someone will play once a week. It is very important because the timing is vital. We should calculate the time in game, and we should count the views of advertising during which will be seen by user during his playing game. And advertising, the income, the revenue from advertising goes to the income in cash flow statement. So first of all, we describe the chronology of each type of user. We don't speak even about money. We just start with timing, the frequency of using a game. Then another important parameter is how long does this type of user play our game. As I already told you, that some people will stay with you for a month. Some of them will stay with you for 6 months, a year, for 2 years, and during this period of time, they have different amount of deposits they spend buying additional features, and in these varied cells we put the time of period counted in months the user stays in our online game. Then for each type of user we put the percentage of users who buy premium accounts. For example, each game can have or can't have premium accounts. Our project, according to the business idea of entrepreneur who came to us, has different percentage of users concerning each type of user who bought premium accounts. For example, in general amount of users of type 1, only 3% bought a premium account. Then another important parameter concerning premium accounts is when users buy this premium account, because he may use this game for 2 or 3 months, and only then after a time he will buy the premium accounts. And another group of people will buy a premium account right after downloading the game. And it is very important because this cash flow from revenue of buying premium accounts will move from left to the right, because not every people buy premium account right after downloading the game. So some time will pass after buying this premium account for each type of user. So it is very important cash flow, because some people when they model the cash flow, they put this cash revenue from premium accounts earlier than it really comes. And they wait for profits from premium accounts, but it comes a little bit in past. So several months should come, and only then this income will come to our cash flow. Then what else? Our deposits. So each type of user, we put the amount of deposit, monthly money that our user put in our game. So they buy different options, they buy different features, and type 1 of users buy nothing in our game, and other types of users buy additional features on $20 a month, $25 a month. And you can also adjust this input data to correct them, to correct simple and discounted see payback period, and see how this parameter affects the financial efficiency of this business. So here we mentioned the basic input data. Let's go on further. Then we should describe the two general cash flows. When our users buy additional features, when they buy premium accounts, we have two different cash flows, and one part of this cash flow comes through Apple, and another part comes from through Android. And here we adjust the amount of cash that comes through these different systems, and here we put the amount of fee we paid to Apple and Android. So it is our expenses, and we should we should pay attention to this type of outflows that also affects the cash flow statement in future. Then after we've mentioned all this information, we start with putting the amount of primary users that come to us when we start our advertising campaign from the first month of operational activity. And here we have six types of users, and here we have the first month of launching our game. And here we put, for example, that we reach 300 users type 1, 250 users of type 2, and so on. And here we can put the speed of growth for each type of user, and all this information will also affect in future our cash flow statement. It is very important to do this operation monthly, because if you do it yearly, you won't see the operational negative results, and you won't see operational losses, and as a result you won't see the additional money you need to plus to your investment, initial investment. And these operational losses in startups played a decent amount of money. And when you do financial model monthly, you are available to see the period and amount of operational losses. For example, you won't reach 1,000 users a month right after your launch. You'll reach it after 6-7 months from the beginning, and in first, second, and third month you will see negative results, and you will see how much money, additional money, you need to invest in this business to cover these negative operational results. When you do financial model monthly, you are available to see it. If you do it in yearly projections, you won't be able to see it. It is impossible to see. Then here we put the month and year we start our operational activity. So November 2016 will be the first month of our launch of our online game. So let's go further. And here you can see at November 2016 we have the start of our operational activity, and we see the users that are growing. And these calculations are all automatic, and you don't need to put additional input data, so this block is absolutely automatic. So here we have block of calculations, because we should find out for each type of user when they come. Here we put the stress when they start, when we start the period of their being with us. For example, one type of user stays with us for a month, for 6 months, for a year, and here we find the time when he comes, and here we count the time during which he stays with us. Here is the start, and here is the period he stays with us. I've hidden all this information because it is a huge amount of figures, huge amount of data. So you can see here we have 1800 Excel, so it is quite a big amount of data. So here it is 3000 lines of Excel. And after all these calculations, we see the consolidation of our users. Then we calculate the deposits for each type of users. Here we see it. And in this green line we see the first income line. It is revenue from deposits from our primary users. Here it is, also in November, when we put in our input data. Another important information when you have a startup, especially in IT, in internet, it is advertising campaign. Advertising campaign forms the biggest part of investment money you need to start this business. How can we count the right amount of money for advertising? Here we have in our blue input cells 5 types of advertising. The first type is motivated traffic. The second type is non-motivated. Third type is partnership programs and bloggers and other types of advertising. And when we here we describe different costs of users that come from different types of traffic. And here we put the costs dollar per user that gives us every type of traffic, every type of advertising. Here we have a conversion for each type of advertising, because it is very important to count the traffic in general for our startup. So here we put the conversion, then we put the structure of users. It is a percentage of general traffic who comes from motivated, non-motivated, partnership traffic, bloggers, and so on. So here we divide our users to different types of traffics they come from. We need this, the information, to calculate the right amount of money we need to invest in these types of traffic. And as a result, we have a figure that we should plus to our investment and see in the result the right amount of money to start this business. So here we put the information describing our types of traffic, the cost of user, the conversion, the structure of users, and then we have a very important table. First of all, we have different types of traffic, and here we have 13 months. We have several stages of our business. We have advertising budget before project launch. Then we have stage the moment. This is pre-launch stage. This is the month of launching this our online game, and here is here are first 6 months of operational activity of our startup. and we should allocate our advertising budget in percentage through these 13 months of our business. It is the most interesting period of life of our startup. And during this month, we put the percentage of our advertising budget for each type of traffic. And after we put the percentage of advertising to each type of traffic, it will automatically result in financial model, automatically result in cash flow statement. So here we have November 2016. We have one in this cell demonstrating that we started our operational activity. Here on the right, our computer starts operational activity 1, 2, 3, 4, 5, and so on. Then from this time to the left, to the past, we count the months of pre-operating stage, where we put additional advertising before we launch this game. If we have some advertising during before we start, we put this money here. We put it here in this stage, pre-launch, and this will automatically appear in October, September, August 2016 before November. And as a result, you will see more clearly when you need the money, when you need additional money on advertising, because many entrepreneurs don't see this real amount of money they need to invest in advertising. They think that they can invest this money from profit, from revenues, but in reality they firstly have expenses on advertising, and only afterwards they have revenues. So this table gives us opportunity to move these expenses to the left before we have income, and see more clearly the right amount of money we need to start this business. What we have here is amount of month that we during which we want to sum the amount of advertising to allocate during this pre-launch stage. If we put here 7 months, 12 months, we will sum not 6 months but 12 months, and see more money we need to start this business. So it is if you think that your business will reach break-even amount of users later, you can put here, for example, not 6 months but 8 months or 12 months to have some additional money, spare money, to finance the finance advertising campaign if you don't have enough money from your revenues, because you haven't reached already the break-even amount of users. So this is some type of your insurance if you think you might not achieve the needed amount of users by some time. Then we have a table with stuff. Here we put the position, the name of position, for example, web developer 1, 2, 3, SEO, and so on. Salary amount that we pay to this to the person who fits this position. Then we have a timing where we put the amount of person that fit every position. For example, in May 2016 we have 5 people in this position. Then we can put 6, 7, 8, 8, 8. For example, sometimes this amount will decrease, and we have 2 years of monthly inputs, and afterwards we have an extrapolation of amount of people on this position in future. So this is stuff of your business. Salaries, jobs, and so on. Here are calculations. These red lines go to the cash flow statement. So this will affect the cash flow statement, this negative cash flow, these expenses. Then we have constant costs. Here we put the name of item, and also we have the first 2 years of inputs. In May 16 we have $45,000 on this item. Then we can put more or less, and so on. These red lines go to cash flow statement, this cash flow. And here we have investment plan. We also have to buy servers, some computers, some additional features, and here we name the item we need to buy. Here we put the price per unit, amount of unit we buy, and here we put the month and year when we buy this investment item, and this automatically affects the investment plan and goes to cash flow statement. So it is quite easy to put the information, and this will automatically affect the financial efficiency, break-even point, simple and discounted payback period, and all the needed information for investors. Among other income types of income that our game generates, we have also an advertising revenue. When people play our game, they can view our advertising ads, and here we describe the revenue from advertising inside our game. And here we specify our advertising revenue, the amount of ad views per user a day. For example, during the game, the average game, the user will see 2 times the advertising, and here we put the advertising revenue, how many dollars spent per 1,000 views we're going to have. And before this moment, we described the primary users, the first users of our online game, who came to us from paid traffic. But also there is another type of traffic who heard about our game from friends, from internet or other sources. And we named this type of traffic word of mouth users. And we also need to describe the behavior of these word-of-mouth users, because they also generate income, they also generate traffic, and here we describe them. First of all, we need to specify when they appeared, when these type of users appears. We say that these type of users appears after 7 months of from the start of our operational activity. So the primary users start to use our game, and after 7 months of from launching our service, we have the first word-of-mouth users who heard from friends that this is a nice game, so let's play it. They didn't came from advertising, from our advertising campaign, but they heard from their friends, and they also start using our game. And here we put the amount of month when they start to using our game from our project launch. Another important figure is percentage of word-of-mouth users in comparison to primary users. And first we see that it is, for example, 18%, and after some time this percentage starts growing. We see 19, 20, 21, 22, and so on. If this game is interesting, the percentage and this this figure will grow more than 100%, 150%. So the amount of more word-of-mouth users should be, as a result, bigger than the amount of users who came to us from our advertising campaign, and as a result, the cost of our user will go down. And this will show us the efficiency of our business. This will show us that the game is interesting, because lots of people come to us not from paid traffic, but they heard from their friends that it is a very interesting game, and they start to use this game too. And here we put the percentage of word-of-mouth users in comparison with the primary users came from advertising campaign. Then we have the structure of word-of-mouth users. We also have 6 types of users, and here we put the percentage of word-of-mouth users inside word-of-mouth audience. So if we speak about user type 1 of word-of-mouth users, it will be 7% of word-of-mouth users, and so on. For each type of user, we put the percent of audience. As a result, we put taxes. For example, if we have value-added tax, we put it here. If we have profit tax, we put it here. If we have asset tax, we put it here. If we have salary taxes, we put them here. And only after all these calculations, we made more than 5,000 of lines of Excel calculations. All this information results in cash flow statement. Our cash flow statement consists of operational, investment, and financial activity. Our revenue consists of revenue from deposits, deposits from users who came from advertising campaign, premium accounts, advertising revenue, deposits from word-of-mouth users, revenue from buying premium accounts from word-of-mouth users. So we divide our revenue from different flows of money from different types of income. Then we have revenue from ads from word-of-mouth users, and as a result we have differentiated cash flow. We have differentiated cash flow that forms at the end our income. Some types of income we have earlier, some types of income we have go to the right, to the future, because it is word-of-mouth users, and we have 1, 2, 3, 4, 5, 6, and this we have 7 months when they when our word-of-mouth users appear and they start generating income and expenses also. So here we describe the revenue. Here we see the salaries of our web developers and other stuff. Here we see the constant costs. Here we have direct costs. It is our advertising campaign from motivated traffic, non-motivated traffic, partnership programs, bloggers, other advertising, Apple fee, Android fee, and so on. Then we have taxes, expenses that we have to pay. And as a result, we have end of operational activity. It is the first important figure that investors look at, and entrepreneurs also pay very much attention to this figure. And as we see, we have negative results from our operational activity during the first several months of our after launching our project, our online game. The first positive operational profit we will have only in October 2017, and before that we should sum these figures, this one, and so on, and see the additional amount of money we need to invest in this business to reach the break-even point. So for example, here we finally have the break-even point, but before we reach it, we need additional money to invest in this business to maintain it. And many entrepreneurs don't count this period, this first period of time when business reaches break-even points in users needed for profits. And when we calculate it right, we see the right amount of money to and we say the right amount of money to our investors, to our partners. If you make a financial model yearly, you won't be able to see this negative cash flow, and you won't see this additional amount of money you need to invest in this business. And when you start your operational activity, you will face difficulties because you don't have enough money. You will have to take additional loans, you will have to attract additional money from your investors, so you will face troubles when you make a financial model yearly, not monthly. And then we have our investment plan. Here we have investment items. We have chronology of investment plan. Here it is. Then we have result from our investment activity. Here we put our money we invest in this business, or here we put the money investor invests in your business. So this is the line of input data that you can, for example, if you put, for example, if we so if we pay, for example, if we put $10 million, we need to start this business, and we go to the right to the cash flow statement. Here we have negative cash balance at the end of the period, and here we see that we don't have enough money to start this business. Also, if you make yearly projections, you also won't see this negative cash balance. And here you can add additional money. For example, we see that we need additional $1,100,000. And we have now positive cash flow at the end of a period during our timeline. So here we describe the main input data, the main information you need to know when you have a startup, when you have online game. What features you need to pay attention when you are going to prepare your business plan for your investors, for your partners. When you've made a cash flow statement, then you have to calculate the financial efficiency of this business, and here it is. In this table we have the financial efficiency. It is a simple payback period, discounted payback period. Here we put the discounted discount rate, net value, net present value, NPV, and here we have figures concerning this financial efficiency. And here we have the graph of simple and discounted payback period. Here we have simple payback period. Here we have discounted payback period. And also for our entrepreneurs, we make additional graphs. For example, here we have dynamics of users additional. It is the sum of primary users and also word-of-mouth users. Here we group our users among simple users and word-of-mouth users. Here we group our users and among users with premium accounts and without premium accounts. So I hope this video was useful for you. If you want us to show you another types of financial models, another types of business plan, you can write in comments what themes you would like us to show you. If you like this video, please thumbs up, subscribe our channel. If you need to order a business plan or a financial model, you can email us or use a Skype. Our contacts are in description. So thank you.